If you're still in crypto and if you're watching this video, first of all, congratulations, guys. A lot of people left and a lot of whales bought up their Bitcoin at a discount. But if you're still here, you're probably wondering the same thing as everybody else. When will we see the Bitcoin bottom? When will it come in? And how do we identify when we are back to up-only charts? What can we look for to signal that we are indeed back headed toward new all-time highs? I'm very excited to bring this video to you guys today because I've identified a chart or a tool that historically has been more accurate than anything else in identifying tops and bottoms. It has been phenomenally accurate, like mind-blowing accurate. And I'm gonna show you guys this tool at the end of the video, and I'll tell you exactly what my strategy is. If this is your first time here, ladies and gentlemen, my name is Chasse. I've been in crypto for 10 years. And on this channel, I go into deep dives about the best projects in crypto, as well as going into my opinion about the macro landscape, not only in crypto, but traditional markets as well. Okay, so look, I'm sure a lot of other YouTubers, especially the ones that focus strictly on technical analysis, will point to something like the RSI and indicate that we are we're severely oversold territory. And while that's true, I would argue that it's not a very good plan to follow something like the RSI when we've never been in this area before. We've never been in a position where we are in a crypto bear market, but more importantly, in a global macro bear market as well, where we are on the cusp of a global financial meltdown. We are seeing all kinds of signs pointing to it. RSI and other charts, people who are just identifying charts, I would be very cautious about taking advice or trying to follow this kind of thing, as we just don't know how low Bitcoin can go. So before I go into the tool that I'm going to use to create a strategy around dollar cost averaging back to the market, I'm going to share with you some things that came from Michael Saylor, his points of things that he believes need to happen before we can see new all-time highs in the Bitcoin space. So the first one is there is an insane amount of cryptocurrencies on the market, and there's over 13,000, and there's probably only, maybe 400 or 500 that actually have really highly qualified teams, true passion and dedication, and the competency to pull off such a disruptive technology that they're building. That means the other 12,500 of them are essentially distracting people and extracting value from what could be put into these more high quality projects. Instead of putting their money into Bitcoin or Ethereum or Polkadot or Cardano or whatever, they're putting it into some Shiba Jesus or whatever. And that is just distractions that we do not need. So the one good thing about bear markets is it does tend to wash out all these really horrible projects. And the projects that have the dedication and proper planning to make it through these bear markets usually are the ones that perform extremely well in the next bull market. So we do need these natural cleansing from time to time. The next thing that Michael Saylor identified was that we don't have any truly regulated and adopted and accepted stablecoin. You guys know how sensitive the stablecoin topic is. Like just since Terra Luna collapsed, we have seen FUD surrounding almost every other stablecoin, USDT and USDC and BUSD. Everything has come under scrutiny, and this is really scary because if any of these things break, it will be a really, really bad place for the crypto markets. I mean, it'll send us into Great Depression territory, which will take a long time it'll just basically set us back, years in adoption. So having a stablecoin that we can trust would really be a very beneficial thing for the markets. The next topic is something that a lot of people have been talking about, how we need it so much for adoption. This is ETF. So while a lot of people think that an ETF will be a godsend to the crypto space, I tend to lean more toward Andreas Antonopoulos. Andreas is incredible, and I tend to align a lot with his opinions. And so let me just read this quote from him. He says, "I know a lot of people really want to see an ETF happen because to the moon and Lambos, but I think it's a terrible idea. I still think it's going to happen. I just think it's a terrible idea. I'm actually against ETFs. I think a Bitcoin ETF is going to be damaging to the ecosystem." And he goes into more about why he thinks that's going to happen. But essentially, it just violates the core principles of decentralized currency, peer-to-peer cash, of not your keys, not your Bitcoin, these kind of things. So yeah, we'll have to see what happens with the ETF. We know Grayscale right now is suing the SEC because they just, for no reason, are denying all these ETFs. But yeah, everyone seems to think it's going to send it to the moon when that happens. So another one is no FDIC insurance. Now, this again goes against the core fundamental principles of Bitcoin, right? Not your keys, not your crypto. And in order for you to have FDIC insurance, you would have to have a bank custody your crypto. Now, I suppose that having this as an option would be beneficial to the space because, your grandmas and grandpas and just people who don't feel safe being custody of their own Bitcoin would feel more comfortable going to their bank and just telling their bank teller, hey, I want to exchange, $200 from my account into Bitcoin. And like, just knowing that it's easy, it's centralized, like they would prefer that. And if that was an option, it would definitely benefit the space just because it would make it more easy for more people to do and have a more secure feeling about it. We need more clarity from the SEC. It is important for companies, enterprises, institutions to be able to enter into the ring. And people think that institutions have come into crypto, but we really haven't seen it yet. A few have, right? But a vast majority haven't because they don't have clarity on what they can and cannot do, right? And so they don't want to take the risk of violating some type of securities laws or something because there are none yet. So, once we have more clarity about the rules and regulations, especially in America, this will open the gates to an all new audience with lots of money and essentially green light Bitcoin for businesses to start adopting, institutions, things like that. That will be huge. This point I wanted to bring up, not because I agree with it, to the very fiber of my being, I strongly disagree with the sentiment, but it is, I know it is a narrative that Bitcoin threatens the environment in any way, shape, or form, even though it does consume a lot of electricity now. We can see that from the research that like even Galaxy Digital did from their mining division that the banking system alone takes up 2.5 times more energy than the Bitcoin network. Yes, Bitcoin does consume a lot of electricity or energy. Bitcoin consumes very little energy compared to simple other things that require way more electricity. And if there's one thing that we should be spending energy on, it is a sovereign, decentralized, peer-to-peer, open currency that gives us our privacy and our freedom to transact with whoever we want without intermediaries. I think that is a good thing to spend energy on. And soon enough, I would say within the next 5 years or something, nearly 100% of the energy for the Bitcoin network will be from renewable energy. It's just, this is a non-issue and I wish people would stop bringing it up. All right, guys, now it's time to talk about this chart that I found, which is really, really interesting. You can find it on Glassnode, and I will tell you a bit about it from a high level, but if you'd like to dive in deeper to find out exactly how it works, I will leave a link to the Glassnode Academy in the description below, and you can go check it out for yourself. But essentially, it's the MVRV Z-score. And what does that mean? It's the market value by realized value ratio. And so essentially, when you see on the chart that the orange line or the Z-score is approaching the red line, it basically means that there is a ton of profit to be taken off the table. So market value essentially means the value, the market cap, right? And the realized value is essentially how much people have paid to put into the asset at that time. So what we're saying when it approaches the red line at the top is that people paid significantly less than the price of Bitcoin at that time, meaning that there is a lot of profit to be had in the market, a lot of realized value. Now, when the line comes down to the green line, where we see it now breaking into that territory, that means that there's very, very little profit to still be taken off the table, meaning that when people sell, they'd be at a loss or break even. So right now, where we are in the market signals that we could be approaching the bottom. In fact, this chart has been incredibly accurate over the history of Bitcoin's lifespan. And we see that it has identified tops and bottoms extremely well within a time span of 2 weeks. So right now, where we see the price of Bitcoin, you see it breaking into the green line here just below $20,000. If we were in a normal macro environment, I would say it's a good time to come into the market right now. However, based on just everything that I'm hearing, talking to different people at different organizations, big ones like Fortune 500 companies and Fortune 100 companies and small businesses and everything, and the housing market, things on a macro perspective look really, really bad right now. And we know that the correlation between the digital asset, the crypto market, and the traditional market is highly, highly correlated for now. So unfortunately, we are vulnerable to the poor monetary and fiscal policies that have been implemented by our government. In my opinion, I would expect to see this kind of defy physics or defy this graph here. So I would not be surprised at all if this breaks through this green line. Now, right now, what this is telling us is if it goes to the edge of the bottom of the green line, that would be a $15,600 Bitcoin price. Because I feel quite confident that we're probably going to go lower than the price it is today. At time of recording, it's sitting just below $20,000. It's probably a good time to start dollar cost averaging maybe now, but I'll have to feel it out, see where we're at from a macro perspective when the price gets to maybe $18,000 or $17,000, which I think it definitely will do in my opinion. And that's when I will start dollar cost averaging in. Now, I will not aggressively start dollar cost averaging in. I will do it in a methodology that allows for my dollar cost averaging how much ever I want to put into the market, whatever I've got in my stablecoin that I plan to invest into the market. And I will make another video based on telling you what assets I think are good to pick up in this price range in this market. The things I've been having my eye on. Let me know in the comments below if you'd like to see a video like that. If you have been waiting on the sideline, or if you have been drooling at an opportunity to get ridiculously cheap blue chip assets that will be potentially the world reserve currency, which I definitely think Bitcoin will be. And if you want an opportunity to pick up some of the best blue chip altcoins that have proven themselves in the market today. In 2017, this whole time period, we didn't really see what these things were capable of, but now we have seen some time for them to get users, traction, ecosystem development, funds around them, developers building on them. So we now know, like, this is a golden opportunity here for the first time in crypto's life. Have we been able to identify really solid projects with great fundamentals, true adoption, big budgets, amazing teams, and we can pick these things up from anywhere between 70 to 95% below their old all-time highs. So that's an easy 8 to 10x just going back to old all-time highs. When we do eventually come into the next bull market, I don't know when that will be, but remember the key points I talked about earlier in the video. Keep your eye out for all of these things because each one of them will increase our rate at which we go into the next all-time high section. So that's an 8 to 10x just getting to old all-time highs. Now, do I think that we're just going to go back to old all-time highs? No. Like right now, we know that these things that people like Michael Saylor and Chamath, they believe are necessary to see much wider spread adoption, meaning institutions coming into the market, like serious institutions with serious money. These kind of things that we discussed earlier need to happen first. When that does happen, it'll make the prior bull markets look like peanuts. And these blue chips that we were able to acquire in times like these days will do life-changing gains. I, on the other hand, am very optimistic and feel very fortunate to be in a position right now where we can take advantage of this market opportunity. And if you prepare right, this is what I've been doing for the past month, is like really seriously looking at the strategy. We see that Andreessen Horowitz, right, one of the best VCs in the world, who just raised the largest crypto fund in the world, $4.5 billion, with a significant amount of that going toward distressed assets. That was a clear indicator to me of a strategy that we should adopt ourselves, right? Looking at tried, tested, true blue chips and getting those at the best Black Friday deals ever, or maybe you should say Cyber Mondays. So guys, this is my strategy. This is what I will be doing. I'm really happy to have found this chart because it makes a lot of sense to me. It's not necessarily technical analysis, although it kind of is, but to me, it makes sense from a fundamental perspective as well, right? When there's less profit to be had, that means there's gonna be less sell pressure. So this makes a lot of sense to me. And clearly in the past, it has worked out quite well. It's been incredibly accurate. And this gives us some kind of indication of what we can expect, where we can identify the bottom, and certainly a good time period of how we can dollar cost average to take full advantage of making sure that our average buy-in cost is as low as possible. All right, guys, I hope that you found this valuable. If you did, even if you didn't, do me a favor, like the video, subscribe to the channel if you're not already, because I give you the best alpha, things that nobody else is talking about. And make sure you share this with everybody. Share it with the people that you care about. If you love somebody, if you care about them, if you want them to be successful in life, share this with them. This is a good gift, and tell them to subscribe and make sure that they hit the bell and turn notifications on. And make sure you watch the video from like the very beginning to the very end, because that helps with the YouTube algorithm. So thanks guys. Bye-bye.